So I always like the walk-on music. Since David's the guest, we let him choose. You didn't get to hear Freebird by Leonard Skinner, which is my preferred walk-on music. But this is a different kind of use case. This is a use case about a great partnership we have in the research space. So part of my role is to lead research at ReSource Pro. And last year we embarked upon a project with Insurtech New York to look at the MGA space in a different way, which I think David and I, the team at Insurtech New York, we're all really excited about what's happening in the MGA space. And when we embarked upon this, we decided that, to use an old phrase from Star Trek, we wanted to go where no man had gone before. We wanted to explore some new areas. So what we did last year and into the first part of this year is we looked at the Insurtech MGA space, right? Which, if you're not aware, in the past 10 to 15 years, let's call it the Insurtech era, there have been about 200 MGA startups operating in the North American market. So we did some exploration of those to understand who they are, what their business models were, just every aspect of the business and technology strategy. So before we launch into that, let me have David introduce himself and tell you a little bit about Insurtech New York.
Thanks, Mark. Really appreciate the opportunity to be here and hopefully can be standing alive like the music with some insights. So with Insurtech New York, whether you're familiar with us or not, we're an ecosystem that connects carriers, brokers, and MGAs to some of these startups. So it could be, new technology startups, or it could be new MGAs. And, we're very tightly connected with the venture capital ecosystem. We have our own venture capital fund. And why we wanted to take on this research is because we run a lab called the MGA Lab, where we work with founders from the earliest stages. Could be idea stage, they could have a feasibility study done, to go from where they are today to their first policy sold. So we've been fortunate to watch the early journey of a number of founders go through that process. And our thinking was, if we knew the patterns and processes that allow them to be successful, we could usher in the next 200 along their journeys.
At the same time, this year we've embarked on a new project, and we've added a couple of more partners. We've Troutman Pepper Locke, the old Locke Lord, and then Fenris Digital. And in this project, a very ambitious project, we're looking at mapping out the entire MGA space in North America, which is somewhat opaque. It's hard to really understand who are all the MGAs, how big are they, what lines do they cover, what's their business model. So we're in that process now. So anyone that's interested in helping us, participating, joining us in this effort, just let us know, because we think it can be of great value to the industry. So David, maybe let's start with just talking about some of the big themes in the Insurtech MGA space.
Sure. So I think if you go back to where MGAs were in the kind of beginning of MGA time in the 80s, they mostly formed because an agency had a specialization. Maybe they were really good at writing churches, or they understood school districts really well, so they would understand their D&O risk. And oftentimes they were better at underwriting than the carrier's underwriter that had to cover multiple different classes of business. And they essentially parlayed that into underwriting authority for a carrier. Today, if you flash forward to what MGAs have been doing over the past 10 years, that trend is very different. They have a hypothesis. If you're familiar with the lean strategy or lean startup methodology, they essentially go out to the market, they interview potential customers, they interview potential retail agents, and they use that hypothesis to actually build a form and a policy and work with their carrier to launch that, which is a little nimbler, but it means that they don't start with a traditional book of business. They might be starting with zero in premium, a hope and a prayer that they can then make it work. And that creates a very different environment. But it also means that most of them actually have underwriting authority. So they're the ones that are setting the rates, they're deciding what the box is, and the reinsurers are approving that box. And in many cases, I think it was about 18% of the companies are actually taking risks. So they're participating in, whether it's a captive or an offshore reinsurer or some type of entity where they're on the hook for the claims. And then, because they have these new innovative ideas, they have these products that, might not be on the market, they're also looking for different ways to distribute. So they might be distributing through embedded. They might have product business models like parametric, where there's no claims process. Or, they might be looking at affinity type of relationships where they're distributing through non-insurance partners. That being said, based off our data, more than half of them are using traditional agents and brokers. So, don't worry if you're a retail agency here. Those MGAs definitely want to work with you. But sometimes for the newer products that retail agents don't necessarily have a big book of business on, they're exploring new avenues to go to market, and that ultimately allows them to distribute through all channels available. So there were some startups that we talked to that essentially had almost every channel you could imagine. So they had a wholesale distribution relationship, they had retail agencies that they worked with, they tried to do embedded, and they did direct to consumer all at the same time. By and large, most of them were only using 2 or 3 channels. But I think what's interesting is when you start from a blank slate, you're not tied to the existing book of business that you have. You can design an MGA to capture a market share in a very different way.
So when I think of big themes, just to build on a couple of things that you said, David, I really do believe that the MGA space in general, and especially the Insurtech MGAs, have really been a catalyst for growth, and especially in the E&S space. If you look at the last decade and the fact that the MGA space has doubled, E&S has doubled, it really goes along with the overarching trend in the industry towards more and more specialization. So a lot of these MGAs are hyper specialized, right? Very focused on individual customer segments, individual types of risks, right? And unique business models. So those are a couple things I would add. And then the third piece is, any MGA that started in the last decade plus is by definition digital native. So, going back to the early days that David mentioned, the model for most MGAs was, look, we're going to base our business on our deep expertise in specific areas of risks and specific customer segments on that one hand, and then the other part of the model is the relationships, right? Our relationships with downstream distributors and with carrier partners. So those two still remain. That's central to the whole MGA idea and concept. But now the third leg of the stool is advanced tech, right? We're seeing much more sophistication. In fact, when we look at MGAs buying policy systems and billing systems and CRM systems and these kinds of things, right? They're becoming very sophisticated in leveraging their data, using analytics, moving to AI and those things that Mary Ellen just talked about as well. So I think it's a really exciting time, and MGAs are helping us to move the industry forward, even leveraging some of these new ideas like embedded and parametric that David was mentioning. So let's talk about MGAs creating their own products. You mentioned it a little bit, right? But give me a sense of what's really happening in that space and maybe some examples.
Yeah, so from the data perspective, I think it's helpful to know what lines of business are more popular or have more attraction than others. So, based off of our kind of chart, and naturally some MGAs are doing multiple lines of business, but I would say a most common trend, or the plurality, is that they're specializing in a single line of business. So liability lines is one of the highest focus areas. I think it was roughly about 30% of the market was doing something in general liability and professional liability. I mean, famous one would be, Next Insurance, which Munich Re recently bought, was really focused on GL for contractors. But there are a lot of other liability lines that have come into play recently that didn't have as much of a limelight. So there's a company called Counterpart, and they focus on professional liability, D&O, and EPLI for fast-growing companies. And naturally, they're West Coast company, and founder didn't even really come from the insurance space. He's like a serial entrepreneur, but he had to be a customer and buy this in all of his rapidly growing companies, and felt that he could do it a different way. And like almost everything that they do in their business has like an AI angle or a fully automated angle to give a lot of leverage to their team members. The second area that was pretty popular was property. And I think that's a pretty natural thing these days. If you think about traditional carriers and admitted markets are pulling out of places like the great state of Florida or California, and they're being replaced by startup MGAs that have a hypothesis. So for example, there's a company called Future Proof, and their idea is if you make your house hardened and you focus on essentially making it indestructible, then when a hurricane comes here, you're going to be okay. And there's been neighborhoods that have proven that that can work. On the other end of the spectrum, one of the companies that was in our MGA lab called Green Shield Risk, they focus on wildfire exposed areas, writing E&S homes. And their whole focus was, how can we better understand the protectable space around your home? And they actually had, as part of their underwriting team, someone who was a wildlands firefighter that actually went out and fought the fires. So he knew what the causes were and what you can do to actually make your homes better suited as a risk. And the third area that may or may not be surprising to you, which was, I think it was about 15 to 20%, was inland marine. So you kind of think about that as like, not necessarily inland marine in the traditional sense, like ships going on rivers or internal waterways, but actually like the leftover category of everything else. So companies that are covering things like pet insurance or personal artifact insurance. So we had in our MGA lab a company that does pet insurance called For Sure, and their unique technology angle was they actually provided the payment at the point of care. So when you went to the vet, instead of having to get the bill and submit it for reimbursement, they loaded up on a debit card and then you paid there. And they also were a fintech company and provided a debit card that tracked all the great things that you bought for your pet. So you remember what chewy toys they like or what food they like, and that becomes underwriting data for them. So, that's kind of the universe, and you can see from those examples, some of it's a specialized discipline like Green Shield Risk that they know that they're better than anyone else about understanding homes that are wildfire exposed. Others like Counterpart, it's about developing technology to make their underwriters more efficient. And then, on the other side, it's like building technology that ties into some kind of affinity group, people that have the same debit card.
So we also looked at the business models of MGAs, of these Insurtech MGAs, and typically the MGAs are considered to be kind of capital light, right? You don't need to raise the same capital as if you were starting up a full stack carrier. But what are some of the business models, and how do they really attract investment from investors as a startup?
Yeah. So, in terms of some of the business models that are out there, I think, you can see the smallest section, 6%, is the simple business model, which is like, we're essentially going to manage a type of business for a carrier, and we have a bunch of retail relationships, and this is kind of the high volume supermarket model. But by and large, like the most common characteristics, and the difference between the blue and the green is they actually are taking risks. That's the 18% that I brought up earlier. So in this configuration, the startups are actively working with the carrier. They're defining the underwriting guidelines. They're managing the filings, and they're very much focused on profitable underwriting. So their responsibility is ultimately to understand that class of business, manage the distribution, and write it. And then the last category that we called program administrators is basically they found an area of business that they think they can distribute in a better way than anybody else. So they might have an affinity type of relationship. So for example, there's a company called InRev. They focus on construction surety, and their whole strategy was, we're going to go and partner with mortgage brokers. So any government job that's going to be done that needs financing, that has a bond requirement, we're going to get involved in that. And we're going to use more or less the carrier's already filed product, but it's our distribution and our technology, so we can write those smaller bonds really quickly, and in a couple minutes, the mortgage company can essentially make a determination whether you can have the bond through their carrier or not. And that's a smaller component. I think that's probably more similar to, I would say, the historical types of MGAs, but you can see there's kind of a mix of a little bit of everything.
One of the things we found in our research is the number one challenge for the startup MGAs was distribution, right? Which kind of makes sense. I mean, they have to convince agents, independent agents, to submit business in through to them. And a couple comments I'll make, and then you can add from there. But when you think about it, these startups, like any startup, they have to build a brand, right? They have to get credibility, right? There's a lot of things they need to do to convince the agent community that they have a unique value proposition that's different than others, and whether it's product or price or service or some combination, or the markets they have access in through, whatever it might be, that's the number one challenge that we saw.
Yeah, so to build on what Mark shared, I think a lot of founders underestimate the amount of effort it takes to build relationships with many of you here that run agencies. And I think that they just think, hey, if I just send them a brochure and a glossy PowerPoint, they're going to start sending me as many submissions as I can handle. And what's funny is that the types of people that actually understand it used to sit in your shoes. They used to run agencies. They were an underwriter at a carrier. And when you talk to them, they're much more conservative about their approach. But the one that I've been the most amazed on, I actually had a chance to have dinner with him in Des Moines recently at the Global Insurance Symposium, is a founder named Wesley. Their company is called Sola. They were also in our MGA lab. And they have two products. They have a tornado insurance product, which is a parametric product, and a wind and hail deductible buy-down product for homeowners. And they can offer it in commercial as well. And Wesley is probably different than almost any other Insurtech founder in the sense that he actually started his company with his two co-founders while he was in college. They left college early to pursue their Insurtech, and basically any opportunity he has, he goes and meets with agencies. I remember we were with him in a conference in Nashville, and I said, what are you doing tomorrow? You're going back home? And he's like, no, we have like 5 agencies that are near the conference. We're going to drive over there and meet with the agents directly. And to his credit, compared to some of the other MGAs we've seen, that relentless focus on relationship building has been paying off so much for them. And they have 700 agencies that are selling their products. They get inbound agencies that want to sell their products because they're truly unique, but they still understand and don't give up on the fact that it's important to build that relationship and to educate because it's a new product in the market.
So a good question to close on, you might be thinking in the audience, are these MGAs actually making any money? Are they making a difference, these startups? And so we did some research on that, and you can share what we found.
Yeah, so what's pretty cool is to watch the growth of these companies. And when this data came in, personally, I was amazed because you think like, startups and venture capital, a lot of them investments go to zero, but you can see from our data, like many of them have graduated to 10 or 20 million in gross written premium. These are all companies formed 10 years ago or less. And what we don't have in this graphic, but we do have in a separate graphic in the report, is actually how long it took. And basically, I think almost half of the ones that got to 10 million gross written premium did it in 4 years or less, and a good portion of it was in 2 years or less. And fortunate with our fund, we have a portfolio company that did it in 1 year, and we're super proud of them, and they're going to be at that 20 million in 2 years. But it really goes to prove that it's a healthy market. And maybe one other point is based off of the data that we had, I think it was like a quarter of the companies were profitable already.
Absolutely, right. So I'll just close with research we're doing, ReSource Pro. If you do a QR code here and take this survey, you actually will be getting a $20 bill from our team at the end of the day. So we appreciate it. We want all of you to participate in the research that we do, because then we feed it back to you and help with your strategies.
Yeah, and I'm also told that Mark and I have green raffle tickets. So if you find us in the hallway and ask us questions about the survey, one, we'll answer your question. Hopefully you want to learn, but if not, we can help you participate in the raffle.
Thank you.